All right, everybody, welcome back to another video here on Financial Friends, a community for people who love business, finance, and investing. Today, we're discussing why small dividends add up. I recently posted a tweet that got a lot of response, both some negative, mostly positive, but I wanted to touch on a couple of the things that were replied to under that tweet. So we're going to check out that tweet first. We're going to discuss why personal finance is personal, and we're going to wrap up with why small dividends continue to add up, both financially and non-financially as well. So first and foremost, the tweet. Here it is. I tweeted out the income I was receiving from some of the positions held within the Dividend Journey portfolio, that being 43 cents from Realty Income, 47 cents from Procter & Gamble, 24 cents from John Deere, and 11 cents from Apple. In addition to those prices, I also tweeted, these are dividends I've received so far this month, and if I'm being completely honest, these dividends are more exciting to watch come in than my paycheck, as these dividends are my future paycheck. All of that stands true, and I stand by the fact that I like investing in these businesses, even with these small dividends I am currently receiving. And there were some things replied. I'm not going to go over those actual replies and who replied. The tweet will be down below. Of course, all love to everybody. Again, this is a community of people, so this discussion, this discourse is exactly what I love about the community, and it's the reason now why I'm inspired to make this video. So of course, it was pointed out that you could probably use your funds in a better way. They had mentioned anything under $10,000. You can get an education, start networking, build a business, do something else with those funds that might help scale your income rather than placing them into these lower dividend yielding or dividend yielding stocks with low amounts of cash in them. And you probably get a better return long run. And I don't disagree. Education, networking, business building, even just reading, which is of course a part of education, but buying books and educating yourself, all of it will probably get you a massive return if you act on it. But personal finance is personal, and that's what we're really going to touch on for this next couple of minutes. I am an individual. I do my own things. I post here on YouTube. You guys see me through this lens that I put myself out. Everyone has a different story. Everyone is doing different things. My things tend to be a little bit more public because I'm posting them on YouTube, but we can never assume that any one particular financial instrument or tool or anything is best fit for any one person. That's why, of course, everything is prefaced with not financial advice. I am not licensed to give you professional advice. I'm never going to give you professional investment advice. And even people who are professionals might not know your whole story. This person, again, mentioned over $10,000 invested. I do have over $10,000 invested, and it's spread out among multiple accounts. This is just a version of the funds that I have. I have a small amount of money here in this Fidelity portfolio, the Dividend Journey portfolio, but I also have an all ETF Roth IRA. I have a 401k through my work, which we discussed. Link will be right up here. I have a taxable ETF portfolio. I have a more fun or risky taxable portfolio as well. Before everything blew up with crypto, I had a little bit of a crypto portfolio. That kind of disappeared into the wind, and it wasn't too large of a portion of my overall portfolio. I'm not worried about it, but the point being, I had the funds that they were assuming that I might not have had. This is just the way I am personally choosing to invest my money. They also mentioned, of course, getting an education. That was mentioned in the slide above. I'm currently in college. I'm studying finance. And of course, I don't have as much funds to invest into this particular portfolio, hence the reason it's a little bit smaller. They also mentioned, of course, building a business, and I am building a business. You're actually watching me build this business right before your eyes. Financial Friends, the Twitter page, something we'll touch on at the end of this video. It's all a part of a broader business. Although it's a social media-based business, I still believe it's a business, and I work a lot of hours on this after school, after work, after hanging out with my girlfriend. So again, personal finance is personal, and it lends me right into this next point, which is the 4 reasons why I believe investing with limited cash can be valuable for certain people. Of course, again, this isn't an overarching It's going to be applicable to everybody, but I think these are broad enough to where it probably will apply to most people. It starts with compound interest, moves into self-education, psychology, and motivation, all things that have a lot to do with investing, although it's not directly financially correlated. So we're going to touch on the one financial piece, compound interest, at the end and begin with self-education. Placing real money into the stock market, in my personal and humble opinion, is the best form of education on stocks, on business, on wealth creation, on anything and everything that has to do with finance. The second that you begin to put your real hard-earned money on the line, you're going to do a couple of things. One, you're going to watch it. Watching it too much is going to be bad. You're going to learn that. You're going to make mistakes because you're watching it too much. Not watching enough could also be an issue depending on if you hold individual stocks. You might learn about ETFs this way. But because your real money is on the line, you're going to pay attention to the news, what companies you own. You might do some additional research, find out how to better position yourself, what other opportunities are out there for you. This will teach you about business, about wealth creation, about the different types of accounts, the taxes that apply to those different types of accounts. Companies, what they're doing, how they're functioning, how they're ran, how the stock market works, how wealth is created. These are all things that, in my humble opinion, and again, it doesn't apply to everybody, but for most people, once you put real hard-earned money on the line, you're probably going to pay more attention to it. You just have to take the first step of actually putting some money on the line. The next piece of that goes really hand in hand. It's psychology. As you invest, you will go through investing cycles, business cycles, where your money disappears before your eyes. We've been seeing it the last couple of months. It's been happening. It can then reappear and more than likely will in the next 10 to 20 years, at least, again, I think very long term, so it could happen sooner than that. It was reappearing right before my eyes as I was investing during the pandemic. Things were booming. Everything was going great. Everything was green all the time. Then that money, as I mentioned, disappears. It's going to be thrown through the ringer. This is going to help callous you. You're going to understand, as we mentioned, market cycles. You're going to understand stocks, business, the way that the world kind of operates, why everything is based around money in the first place. And again, those calluses will harden you. If you're younger, you will be more prepared for your investing journey, your 401k balance to fluctuate, and everything in between as you move on. But you don't get that experience if you're waiting to save up $10,000, $20,000, $30,000 before entering the market, and you could make some very critical mistakes when it's already too late and not be able to build wealth, because when you're young, when you have the opportunity to mess up, invest, start fresh, start new, whatever the case is, that is the time when those lessons are going to be most valuable and least affect your future retirement or investing plans. Next up is motivation. This is probably a pretty good thing when you are younger. As you begin to have money in the market, you watch the dividends come in. You see them get reinvested. You probably will, and I put may because not everybody might, become much more motivated to invest. And a huge intangible asset is this motivation to invest. It's a massive reason to begin to get invested because, as I mentioned, as soon as your money is on the line, that motivation, that research, that drive, your psychology begins to work, and you begin to care more about your investments than you ever did before. And the second you begin to care more about your investments than you do the fancy new cup or the brand new cell phone or the Apple Watch, all of which, of course, I'm wearing, a little hypocritical, but you get my point, then you will have more money invested in the market because you'll skip the phone, you'll skip the cup, you might become a little more minimalistic, get rid of some items, and now you begin to build a real portfolio over $10,000 that can begin to do exactly this: compound. So compound interest is when your money makes money, and we take a look at 3 different scenarios here. The first one is the $1,000 that I might have in my portfolio now. If I can add a mere $100 to it for 40 years at 8% interest, I'll come out with $332,000. Now imagine I decide to wait a little while, 6 years, build up $10,000 and begin investing at the same pace, but just having saved up $10,000. I will come out with roughly the same amount of money, but $5,000 or so less. Not a huge difference. But what if when I was investing that $10,000 right at the beginning, I didn't have any calluses built? I didn't understand 6 years of market cycles. And now the market tanks and I freak out, pull all of my money out, and we start back from square one. And this could be me in the third scenario. It could also just be someone who took a little longer to save up those funds, but I reinvest my $10,000 or invest it for the first time, and I contribute again $100 a month for 30 years. At 8% interest, I'll come out with $236,000, or let's call it $100,000 less than the 4 years before. and definitely about $100,000 from the 40 years. I think this difference here is a little bit closer to 90. This is me just doing some rough math looking at it. You get the picture though. You can afford to make a mistake with 40 years invested versus with 30 years invested versus 34 years invested. And even though these two are the same, there's some crucial things that could happen between here and there that could mess up this $10,000. There's a crucial couple things that could happen between here and here where you might not get invested quite as soon, and now you're running into a little bit of trouble building up the same portfolio that you could have if you just got started with your $1,000 and invested $100 every single month. So, in summary, investing is personal. The way that you invest is personal, how you manage your money is personal, but small dividend payments can become financially rewarding, even while acting as more of a psychological motivator. Even if you're not doing it for money, you could actually come out with something better financially down the road. It might not be a true perfect financial decision, and I am perfectly okay with that. Again, if the person who commented under that tweet sees this, I hope that you don't take it as a clap back or any type of, hatred towards you. There's none of that here. I think the finance community, this person, everybody means well. It's a great supportive and motivating community. It's part of the reason why I love being a part of it, and I want you to join the finance community as well. Join the financial friends community. It's a group of people who do love this business, finance, and investing, so comment down below your thoughts. Also, you see the addition of the mug here next to my normal little watermark. Go ahead and check out the link down below for the Shopify store. If you want to sip a little bit of coffee with me in the morning, watch those markets open. I'm tweeting every single morning around 8:30 to 9:30 when those markets do open. You'll see the mug there. Go ahead and check it out. It does really help support the channel, and I do appreciate if you at least even just go take a look at the mug. Thank you very much for watching. I do hope you have an amazing day, and I will see you all in the next one. Take care.